Short answers to small business questions. Hi, my name is Rick Ed, and today we're going to talk about small business tax. Tax can eat up a very large part of your small business money. So one of the questions that concerns people a lot is, am I paying more tax than I should be?
And that's what we will address in this presentation. First of all, if you are registered with the CIPC, you will expect to be paying tax, but you don't always need to be registered with the CIPC. The CIPC themselves say that in many instances, it's not necessary for your business to be registered with them. And yet, even if you are not registered, you'll find that your business is paying tax. Some taxes are quite unavoidable. If you are not registered as a VAT vendor, you will be paying the VAT on purchases that you make, whereas VAT vendors will pass that VAT levy on to the next business or person down the line. Any imported goods like computers or cell phones carry a customs duty. And of course, every time you travel, you're going to be paying a fuel levy. If you do choose to register your business, you can use the CIPC's convenient all-in-one biz portal, where you can register your company with the CIPC, you can open a bank account, you can get tax clearance certificates, you can get a web domain, and you will automatically be registered with SARS for income tax. This can be a concern though, because by default, as a business, you will be registered for corporations tax. In other words, you will be paying company tax on your profit at 28% on your profit. That's more than a quarter of your profit that you will be paying to the receiver of revenue. If you don't register your business, you can pay tax for your business at your personal tax rate. Your personal tax rate may in fact be substantially lower than the company rate, and the more you earn, the more tax you pay, whereas with companies, they pay the same rate irrespective of the amount of profit that they make. So if you're earning so little in your business that you will be paying less than the company rate, it may make sense to rather pay personal tax rate until you reach that point where your personal tax rate is the same as company rate. In that case, you would change to company tax and register with the receiver of revenue. And when you do that, bear in mind that there are several ways that you can save money. SARS allows you to register your business either for turnover tax or small business corporations tax to help SMMEs to grow their businesses. If your small business has income from sales up to 1 million per year, you may well qualify for turnover tax. There are a number of criteria that you have to meet. For example, if you're a plumber and you are the person who does the plumbing in your business, then you would be considered to be a personal services provider. If you have a real estate business and you are the estate agent, you are a personal services provider and you do not qualify for turnover tax. Make sure that you meet all the requirements if you wish to apply for turnover tax. If you do qualify, you may be saving a lot of money. If you look at this example, if the turnover from sales in a company is R1 million a year, and let's just say that their net profit is $500,000, they would pay 140,000. But if that company was registered for turnover tax, on the same 1 million turnover, they would only be paying just over 14,000. That's 10% of what they would be paying in company tax. That's an enormous saving. And if turnover tax isn't attractive enough in itself, there are other advantages. You don't have to register for provisional tax and several other taxes, and you only submit your staff payroll tax twice a year. It may be that you don't qualify for turnover tax because you may have sales of over $1 million per year, in which case you may well qualify for small business corporation tax or SBC tax. And once again, there are certain criteria that you need to comply with, similar to those for turnover tax. But in this case, there is also an annual limit of 20 million in turnover. If you have a look at a similar example where a company paying company tax would pay 280,000 on taxable income of 1 million, in other words, on their taxable profit, you would find that as a small business corporation, you'd be paying 100,000 Rand less. And once again, that's very attractive over and above additional advantages like getting your assets depreciated in the year of purchase. I must warn you that I am not qualified to give advice, and tax regulations change from time to time. So don't take my word for what I have said here. Please consult a tax practitioner or an accountant before you make any tax decisions. I hope you found this presentation useful to you and your business. And if you did, please share it with others. I wish you great success in your business. Thank you for watching. Goodbye.